Fulfilling your tax obligation is very crucial for any businessman or woman. But what if you do not know the right taxes to pay, or you are not abreast with the tax laws or the changes in the tax law, or you do not know when to file and pay? You could fall foul of the law. Today, we have with us Dr. Titilayo Fowoko, a council member of the Chartered Institute of Taxation of Nigeria, Chairman, Membership and Professional Conduct of the CITN, and the first female president and third president of the Association of Certified Fraud Examiners, Southwest Chapter. Dr. Fowoko, thank you for joining us today.
Thank you, Amaka. How are you today?
I'm fine, thank you, Ma. Good to have you.
Thank you.
Ma, we are looking at some tax obligations that taxpayers need to be aware of to enable them to fulfill their tax obligations accurately and promptly. Now, let's start with VAT. We know that VAT is a consumption tax which is borne by the final consumer. But the beauty of VAT as practiced in Nigeria is its multi-stage system. Please, we would like you to walk us through the multi-stage system of VAT, that's from production to supply and to the final consumer.
Okay, thank you, Amaka, for that. Let me start by saying that some people say they don't pay tax. When they say that, I smile, because these are a set of people that enter the eateries and they eat something. So definitely they will pay tax. And what they don't know is that the tax they pay is in what they buy, and the price is already inclusive. So for VAT, like we said, is multi-stage. At the point of production, you buy raw materials. You get services. All those things has VAT implications. Now, when you buy raw materials that are VAT, the VAT becomes what we call input VAT for production. So your cost of sales is what determines your input VAT element is on your cost of sales. If you import, you also import and you pay customs duties. On that customs duties, there are some charges and VAT elements. So those VAT you pay at the port, importation, you pay on your raw materials, you pay on even some services you get to be able to produce whatever you're going to eventually sell to the market. It's called input VAT. It's not all VAT you pay that qualifies for input VAT. We need to also be clear about that. We have VAT that is paid on overhead, which is also part of the cost you incur as a business. That will not qualify for input VAT. The input VAT we are talking about is the VAT you pay on your raw materials or goods that are used as input into your production process. So when you have that, you need to have your good records. Your records must show that for those cost of goods that as VAT, you can show the VAT you pay. The documentation must be very solid on that, because you can't just claim without proving it in the event of a review by the tax authorities. So that's the first stage. Now, let's say, for instance, you have some other thing like spares that you use for a bit of production machine. Those VAT you pay on those spares will not qualify for input VAT. So you expense them fully. Now, you move to the second stage. You put these things into the production process and you change the form. It becomes your finished goods. At the point when it becomes your finished goods, you're ready to hit the markets. You want to hit the market with a packaged product. Now, part of the cost of the packaging has input VAT in it, has VAT in it. So you need to put all this together. When you're not going, you determine your price. You must also be able to cover your costs, put your margin, everything, you get your sales price. On top of that sales price is your output VAT when you're selling to the market. Now, when you charge VAT on your finished product to the consumer or whoever wants to take it off you, maybe it's the retailer, maybe it's the distributor, whatever, the VAT you charge is the output VAT. You must also be able to get that and show it on your invoice, because the invoice will be the basis to show that you charge VAT. So you've actually incurred input VAT, but mind you, you did not use all those products for the particular goods you're selling. So you're still having a portion that is there sitting down in your input VAT account. The only input VAT you can claim is the one they've already used for the production they are selling to the market, so that you match properly. Now, the input VAT you paid on those costs for that production, everything used for that production, you now have to fill your VAT form and you disclose them and offset against the Apple VAT you charge to your customers. The net is what you're paying to the government. So there's some adjustment that needs to be done. Maybe you have you sell to an industry where they're not going to pay you the VAT, but they're going to withhold it, like oil and gas. At that point, you must show that out of my total sales, 30% of it or whatever went to oil and gas industry, VAT not paid. So you come to your VAT form and show that adjustment. Now, that's on the consumption stage by stage side. Now, when you get to the market and it's taken off you, there's a level between the consumer and the producer. Now, I'll tell you, those are the distributors, wholesalers. They take it wholesale, and they are the one that will end up getting it to the retailers or to the ultimate consumers. At that point, they also have a multi-stage VAT, which they don't know. So most times, people just think when you buy. As a distributor, I don't have VAT obligation. You do. Because if you look at the invoice, whatever you're selling is your selling price. The invoice will have the VAT on it. You have taken it up and you have sold. Now, where there's always a problem is that at times, they get what they call a rebate or a reduction in price or a discount. When they get that discount, they must be able to account for the VAT element on that. When they are selling, they must also show, because what you get on the discount means that what you paid is less by that discount. Maybe products that they say, okay, buy one, get two. You understand? You pay for one, you get two. So definitely you have to do your valuation so that you be able to account for the proper VAT on what you buy. When you're selling, you need to also know the VAT elements in the price you're selling. Because at times, they will tell you, this is especially if it's a control price. They tell you the price in which you're going to sell. So you must be able to account. Where you now have a situation whereby your VAT you have paid at the point you bought is less than the VAT you have charged when you are reselling, you must also account for the VAT payable to the government. But let's assume it's the reverse, that you end up having to suffer VAT, you have more VAT to paid on your on what you bought than what you collected on what you sold. You also need to show it in your VAT return. There's a column for adjustment because it needs to be clear. But all this cannot be defended in the absence of documentation. I always tell people that it's easy to manage tax audits. It's easy to manage tax authorities. What they want is evidence. I have bought and I have sold. Show evidence of what you bought, how much you buy it. Show what you recorded. If everything aligns, then you don't have a problem. You go your way. So VAT is stage by stage, and for every stage you must know what is input, what is output, and you must be able to account for whether you're having a payable or a refund. I know some people have gotten refund if there's genuine refund because there's an audit. You can show, you have records to show your input, records to show your output, records to show that you actually have a genuine refund. Then you're able to, so that's how it goes. Now, from that middleman between the producer and the ultimate consumer is the distributor that I've just explained. Then you now have the consumer. At the point of the consumer, you bear it all. You can't claim anything. You've bought, you've eaten it, you've eaten the VAT. So that's it. So that's how it goes. So the ultimate consumer bears the brunt. So you found out that because of the multi-stage, at the end of the day, the VAT that the ultimate consumer is going to pay is higher because you've taken account of the input VAT, that as value has been added in the production, and based on the value add, VAT has also come on, and then the final thing sits with the final consumer. So it's just look at the first stage you pay 5 naira, you get to the next stage, you are charged 10 naira, take 5 from 10, you have 5, and then you repay 5 to the government, and that 10 goes on again. Somebody else added something on another value, adds that, and it goes like that's as multi-stage. So the end product sits with the consumer. And so everybody that consumes in a eatery or uses any product that's vatable pay VAT.
We all pay indirectly.
Yeah.
Thank you very much, Ma, for breaking that down for us. Now, you mentioned that documentation is very, very important. We want you to elaborate more on the importance of VAT documentation for the purpose of filing and remittance of VAT. Or
Yeah.
do you want to
It cannot be overemphasized. I will tell you why. You know, it's not costly to keep documents. It's carelessness that makes us not to give documents a recognition. I know we're still going to, there's, you know, VAT and withholding and they are like Siamese twins. People talk about them, but they are not the same. When you're talking about withholding tax, I always tell people, paper is money. Paper is money. Don't see it as something you should shred or throw away if it has to do with your transactions. That's on that side. So when it comes to VAT, let's assume you import. You bring in your ship. The shipping documents are there to show that you brought it in. It shows who you bought it from. It shows which vessel brought it to you. It shows how much you pay. It shows all the cost. It shows your customs clearance. All those documents are important. Thank God now that we have virtual platforms. We have online filings. Just get those documents. In fact, some documents come in soft copies. You don't need to spend money. Manage your fund. Don't print. Save it in a very good place. Create a space in the cloud. You know, everybody goes to the cloud now. I've been saying something that maybe very soon the cloud will not be full, but everybody goes, save it in the cloud. Make sure that you can retrieve it when you need to be reviewed. So documents is very important. That's on the side of what you buy. You bought locally. You have all your invoices. You have contracts that you've negotiated with the person. This is what I'm going to buy. Maybe I want to buy it in installment. I want to pay in installment. I want to buy it over time. All those documents, also make sure you keep them. If you decide to still be the conventional Nigerian and you have hard copy, please scan. Scan them properly. Reference them. Keep them in a shared drive, in a portal. We also have access to portals. Even if you don't have, we have Google Drive. Let's even say I'm a one man, I'm Titi Show. I have Google Drive. Put it in my Google Drive. I can retrieve anytime I need it. That's on the side of whatever you have. Same for when you sell. Your invoices. People generate electronic invoices. Make sure you have them in a readable form, such that when the review comes, you just get them out. In fact, tax authorities don't tell you to print. They will say, give us a download. So just go, download it, reference it properly. January, you can decide to use your January to be 01, first day, 0101 22. Invoice, you can say by customer, ABC Limited. Have a way in which you arrange these documents serially. So when you need to submit documents to tax authority, you just bring them out. They themselves will not have a choice but to say, well done. So that's where it's missing, documentation. I was telling someone, I said, I do have a backup of my documents, personal documents, as far back as 1998. I started working in 1994, and I can retrieve some of my documents, just that I feel people might have tampered with it because at a point, from 1994. So if we are good at archiving, personal archiving, and we are good at corporate archiving, we'll have less problem when it comes to defending our positions.
Thank you very much, Ma. Now, please, could you take our viewers through the process of a detailed and accurate filing of VAT on the TAXPRO-MAX?
Okay, I would say fine, I know Pro-Max. I'm not an expert on Pro-Max. I have people that do, but I do review what they do. And first, let me commend the tax authorities for Pro-Max, though I feel they can do better. It's something that made life easy. People sit in the office, they do it, they file, and they go and sleep. So the first is you have to actually go on Pro-Max, go to the site of FIRS. But before you start the Pro-Max, make sure you have all these things I've talked about available, all your documentation. Because what I always also tell people is, we used to have a template. We have a template for VAT filing. Replicate that template on Excel. So when you're going on Pro-Max, you already know the information. Pro-Max has its own template. So it's always good to have that format, same format as what you have, so that when you are filling the Pro-Max template, you are getting it. So first is you go to the taxes portal, the TAXPRO-MAX, and then select taxes. Now, when you select taxes, you need to also select VAT, because there are different taxes, CITs, they are always one. Select VAT, and then you ask that you want to process VAT. So when you ask that you want to process VAT, the first thing is your sales schedule, because you have sales, like I explained, output VAT. So you download that sales schedule, you populate it. It gives you everything. I know FRS has also tried to ensure that you list it by your vendors and by your customers. On the side of your input VAT, you list it by your vendors, so that at least you can be able to see, once they see on that side, you also see on this side. There's that synchronization. So when you populate the sales schedule, you now have to upload that schedule and then select currency. Now, God help you if you have to pay naira, you select dollar. But you need to just select currency, and then you say you want to proceed. So it gives you the currency. Then it also opens your purchase record, because when you have the sales will give you the output, the purchase will give you the input. So you have to also do the input side, which is your purchase record. When you open your purchase record, you proceed. You now fill in everything what you need to fill, update that. And ordinarily, I expect that, based on my understanding, you should have some purchases reflecting if the other party have done the proper thing they should do, reflecting you as a customer. So on the purchase side, you should be getting that. Then you have sales adjustment. You know, I mentioned if need for adjustment, you've given discount, and so things like that. This one, give this one, give that one. So all those necessary adjustments, or you still have goods in stock that is not being used, all the adjustments required, because normal adjustment is not different from what the adjustment we do. Or you have VAT withheld, all those ones will now be populated, and then you now, if you don't have any sales adjustment, definitely you say I don't have sales adjustment, and you proceed. So when you finish with sales adjustment, then you have to now move to the VAT form page. When you move to that form page, to show you the amount payable, it will show you whatever. You need to be sure it's correct. You don't just click and say submit your own. If you submit a return that is not correct, and then you get a liability that says you need to pay with penalty, you'll be at work. So once you have done your declaration, you've checked it's correct, you've done everything, then you submit it. At the point you submit, you go to the next stage of raising your PRN. Your PRN means you are owing. You have a VAT payable. Generate the PRN, process your payment, check whether you want to pay through bank transfer or whatever, and then you make your payment. You've closed it for the day. But one thing I always say is this: even having done that, your documentation is critical. It must be there to support. So when the tax authority generates your VAT that you submitted, they must be able to see that you have documentation to support it. I think just a summary of how you go on and do the VAT filing.
Now, in running one's business, there is always this problem or issue of separating personal finance from business finance, which most taxpayers, or let's say those that operate in the small and medium businesses, fall foul of. Can you please tell us the importance of financial separation, the importance, and also what could happen when a taxpayer fails to separate the personal finance from the business finance?
You see, this is what happens mostly when we are dealing with the small businesses. It's peculiar to them. And why do I say that? I've mixed with a lot of them. And I will say that a lot of them don't have that skill and understanding. But what some of us do is to advise them, to guide them, so that they don't mix. Once you do that, you are already exposing yourself to avoidable liabilities, because you need to start explaining what that fund is for. It's not for business, it's personal. My brother sent it to me. My sister said I should buy a shoe. It's my sister's money. It's my mommy's allowance. Why save yourself? Why not save yourself that explanation? It's always better to have separate accounts. If you're doing a business, anything you're doing as a business, do it in the business name. Anything you're doing as an individual, you have your personal account before you even started running business. Don't go and say they should set up your business account as your personal part of your personal account. No, set up a new account. Nothing stops you. The only difference is that because you're setting up a business account, the requirements will be different. They might need your certificate of incorporation. They will need your TIN registration. They will also need your evidence that the directors have paid their taxes, because that's also an area that people run away from, so they go and use personal accounts, you know. And you will also be able to use it to track the transactions related to the business. For instance, there was a time that I had to speak to FIR some time ago when they had a friend had a problem. She's a distributor, and she was mixing everything together. So they just took all the credits, 5%, and said, come and pay VAT. I said, bah, it's not done like that. Why don't you look at what is in this account? Did even some narrations, money from Auntie Yabo. It's not, okay, you may not know what it is for. You may say money may mean anything. Okay, fine. Who is Auntie Yabo? Oh, she's my sister. And you confirm that. So don't mix it up. Let it be clear that this is sales of sugar, sales of spaghetti. Let it be clear. So your narration is also clear. You might even separate financial record, but you are using wrong descriptions. That's also another issue. When you are using description that is confusing or could be misinterpreted to mean a sale, then you put yourself into trouble. So you must be very clear in your narration. If it is personal transaction, let it go to your personal. If it is business, if it's an advance payment, put it advance payment for this. Sales invoice, and you can say payment for supply, sales invoice 124. So it is clear. So you can match your sales invoice to what you collected. Because when you have reviews for the tax authorities, they want to check that you have included everything, full and no false inclusion, complete inclusion. At that point, you can say, all this money in my bank account that are credits, this is what the invoices relates to. The debits are my purchases. These are the invoices I got from my vendors. And with that, that account is a replica of what you do. The moment you start to mix personal funds, then it becomes a problem. Let's assume you took a loan. It should not go to your personal account. If it's for the business, then you put the loan in the business account and say loan for working capital. When repayment terms, you have an agreement that says your repayment and you keep that. So it's always good to separate the two. So you don't have issues with misinterpretation of your transaction. You don't have issues with unnecessary tax liabilities that you can avoid. You don't have issues with even you thinking of what is which is which, and trying to struggle with reconciliation. So you reconcile every account separately. If you like, don't reconcile your personal account, it's your personal problem. But the business account must be properly reconciled so that you can show good costs for your transactions, you show accountability, you show transparency, and then you'll be able to smile when the taxman comes knocking at the door.
Of course. Now, but let's look at withholding tax. Like withholding tax and VAT at times work hand in hand. Now, could you please share with us the system of reconciliation, that is reconciling withheld taxes with payments made to ensure all withholdings are correctly documented and remitted?
Now, withholding tax has two aspects. Even though VAT, I didn't finish speaking, I just strictly restricted myself to the production side, because VAT also have different VAT type. Withholding tax have two aspects. One is I sell, it's liable to withholding tax, there's a deduction made. That is an advance payment of my income tax. But I will have a problem if my customer that deducted withholding tax did not remit it, because I would not have credits that I'll go and use to offset. There's always an issue also with selling to individuals. If you sell to individual, you don't have obligation to withhold. They will tell you, sorry, I sell, I pay. Even most individuals will tell you, what is withholding? Now, who am I remitting to? I want to buy from you. I say, I withhold tax. I enter a shop. I want to buy something. You allow me to go on credit and I pay you. Who will I go and remit to? So you have a problem with individual. But let's look at business arrangements now. At the point when you pay to your supplier, you withhold tax. You have one obligation, remit to the tax authorities. when you are remitting, use that your vendor's account with the tax authorities, payer ID if it is individual, state or business name, TIN if it is corporate. So when you do that, they can get their credit. For instance, for individual, for business names, the states will tell you, I will generate payment reference number, just like we do for FIRS. They will generate it, you use that to pay. And that's what they do now in most of the states that are now online, except for others that you just do your schedule, do the bank transfer, and then you go to them, give me my receipt. Like Lagos State now, you generate a payment reference, and then you use it to pay, and some other states. For FIRS, you also do. So at the point where you've done that, I will now take all my invoices. I will check what you pay me, customer by customer. What do I expect you to deduct? Let's assume you're supposed to deduct 5, you deducted 10. You would have paid me short. I must be able to show a reconciliation of that this customer has over deducted. God help me if he remitted just 5%, or is not the type that does proper remittance. I'm having a problem. So I must at every point be able to check my sales to my withholding tax receivable. Now, if on the other side of my vendor, I must be able to check my withholding tax payable to my vendor's payable account. Because at the point when I'm paying my vendor, I deduct withholding tax, I pay them the net. So if I've remitted everything, I should also be able to confirm to my vendor that I've remitted, because he must see a credit in his account. So there are two reconciliations you have to do on your own income as withholding tax recoverable account, and on the other on your vendor as the withholding tax payable account. So at every point in time, you must be able to say this. Now, with Pro-Max, you can actually check your withholding tax status to know whether it's been remitted. So what I always advise people to do is, your record says you have withholding tax recoverable that you need to use to go and knock off whatever you have in your books of 10 million. But on Pro-Max, you are seeing 8 million. You need to now identify which of your customers that have deducted from you and have not remitted, so that you can now know where the problem is coming from. Now, let's assume you have more on Pro-Max than on your record. That's another reconciliation issue. Technically, Pro-Max and your record should be the same. So reconciliation needs to be done monthly. You don't have to wait till 3 months. Once you finish your transaction for the first month, check your sales. Did anybody deduct from your sales? How much did they deduct? How much did they pay you? Then check what you have on Pro-Max as withholding tax, credit waiting for you. Reconcile that. You look to your payable, check what you've remitted, because your payable, from the accounting side, once you make payment of that payable, you should go and be taking it out of payable, knock it off to show that you've paid. The only thing you should be having in your withholding tax payable should be what is due for the previous month that you're going to pay next month. You understand? So that's how that reconciliation needs to be done. And you cannot do this if you just assume that everything is okay. Assume things are not going to be okay. Do the reconciliation monthly. Don't wait, don't compile, don't pick it up. With that, you know whether you're losing money or somebody is not doing things right.
Finally, before we let you go, Ma, could you please share with our viewers how to apply withholding tax rates accurately for those who may have challenges?
Amaka, this is a very, very good question, because quite a lot of people mix up the withholding tax rate. And I won't lie to you, the current withholding tax regulation, though I see it as a move in the right direction, confusions may still come. Because I know some people have started implementing, and we expect that there should be further guidance, gazette and everything like that. Now, withholding tax rate prior to the regulation 2024 is usually 5-10. And it's specified individuals and partnership, corporate, legal entities. You need to look at the type of transactions. If you're talking of directors' fees, whatever individual, corporate is 10%. If you're talking of rent is 10%. So you must understand the rates. Now, you also need to understand who you're dealing with to apply the correct rate. a lot of times people, for instance, some people might give you an invoice, and that invoice is their franchise name, not the registered business name. If you now say Ibis Fashions, but he registered is at Ibis Fashion Limited, but he puts on the invoice Ibis Fashions, you assume he's an individual. Am I? No, correct. And then you do 5% and say, okay, I'm paying Ibis Fashion for services. 5%. But Ibis Fashion is Ibis Fashion Limited, which should not be a 5% for the type of service it's performing, but a 10%, especially if you consult them for some advisory, and they tell them, how do we sow this, they advise you on it, it's 10%. But if you're talking of like agency is 5%. If you're talking of contract for service, it's 5%. If you're talking of lease, it's 10% for. So you need to understand what rate applies to what. If you're talking of interest, it's 10%. So you must understand the rates as they apply. And that's why I always tell people, always have, in fact, you can just paste those schedule somewhere in your office. So you'll be reading it. It becomes your Bible verse for that period. Anytime you have withholding tax, just go back and look at your wall and you read it. So when you talk about withholding tax, like I said, you need to know the rates. People mix the rates, and it is clear. Like I said, just go download the rate. Even the current rate, I've saved it somewhere, and I told everybody, look. So you look at the current rate. Now, the implication of the current rate is that things are now changing from 5 to 10. You're now having different rates. So I tell people that when you want to be a good tax person, the tax law and the amendments is your watchword. Because you cannot wait and rely on the knowledge of yesterday to solve the problem of today. By tomorrow, you are still. So you need to know the rate, the type of service. Now, people always mix consultancy and professional services. Professional services are usually partnership, individual, registered business names. People that have ABC Professional Services, ABC and Co. But mind you, some people will have ABC Professional Services Limited. There's difference. You need to check. So that's why it's good for you to have their registered business name. At some point, I had to tell my team, go online, go to CAC portal, confirm that this is the registered business name. We now notice that the name on CAC is not the same. So we now started saying, no, rate is not 5, rate is 10. So those are things that, you see, I always tell people that you don't just rely on even what your consultant tells you. Consultants, they also learn. When your consultant knows that you know, they will be well prepared to come to you. So they need to understand the new rates have differed. We now have directors' fees attracting 15%. That used to be 10%, which will be different from dividend. Dividend used to be 10%, directors' fees 10%, interest 10%. It's no more like that. So those are what I would just say, that people should know the rates, the transactions that they apply to, and the category of beneficiaries, so that they apply the correct rate. When you make mistake with application of the rate, let's assume another aspect, you've deducted properly, but you paid to the wrong tax authority. It's also an error that could happen. At that point, you are at the mercy of the tax authorities. The only way you can adjust yourself is if you still have other transactions with that particular vendor. Then you can now say, sorry, I deducted 5, but I paid to this authority. Okay, how can we do correction? But some vendors will tell you, sorry, it's your problem. So you need to understand where to pay to. For instance, as an individual, if you deduct withholding tax from individuals or partnership, and they are residents in a state, don't pay it to FIRS. Pay it to the state of their residence, so that there will be issue. Now, let's assume that you make mistake, you pay to a wrong state. You are either writing to ask for correction, or you are speaking to the state and saying, I made this error, I've actually evidence of payment. You are not supposed to pay twice. At the same time, you're not supposed to commit that error. So you might get some human feelings if you plead your case well. But I think these are areas that people should look out for: applying the right rate, paying to the right tax authorities, and following up to ensure that you have your credits. Otherwise, you're losing money, because that's supposed to be used to offset your tax liability if you are a beneficiary of that withholding tax remittance.
Thank you, Dr. Titler Fowoko. Really appreciate your time. It's really a pleasure to have a chat with you and draw from your wealth of knowledge and experience.
Thank you, Amaka. It's a pleasure having you too. Thank you, and have a lovely day.
To be on top of your game, in order not to fall foul of the law, you need to keep abreast with the current changes in the Nigerian tax law. For up-to-date information and education on taxation, please subscribe to our YouTube channel.